everyone, welcome back to the Technical Analysis Institute channel, where we help traders start and sustain profitable careers with confidence and long-term success. Today we're diving into a crucial topic that every aspiring trader needs to hear. Our focus will be on avoiding trading mistakes, and trust me, you don't want to miss this. In fact, our video title today is Avoid These Common Trading Mistakes and Succeed. So stick around because we're going to unpack this and much more. Let's get started. So let's talk about this age-old advice: only invest money that you don't need. At first glance, this might sound like nonsense. After all, we start investing because we want to grow our wealth. But there's a deeper reason behind this advice, and it ties directly into avoiding one of the biggest trading mistakes out there: poor risk management. Everyone in the trading industry is required by law to include a risk disclosure in all public materials. We probably should add one to all our videos too. Here's ours. If you trade, you'll lose money. And if you're not a serious student of technical analysis, you'll lose a lot of money. So why is this important? Why should we remind our customers, students, and viewers that trading involves risk? Well, it all comes down to this. What the industry is really trying to tell us is only invest money that you can afford to lose, because chances are you might lose it. And you know what? That's fair advice, because people do lose money when they trade, often for two big reasons. Let's dive into the top 2 trading mistakes and how you can avoid them to succeed. Bad money management practices. Now, this is the first major mistake. Bad money management, or worse, but more realistic, no money management at all. In another video, I gave you a big clue to tackle this issue. Think in percentages. So if you haven't watched it, make sure to check it out after you finish this video. Now, good money management involves a clear understanding of the risk involved in every trade, and never investing more than a small percentage of your trading capital in a single trade. It also involves the proper setting of stop losses based on market structure, and not letting your emotions dictate your actions. To avoid this mistake, follow these simple and basic steps. Always set a stop loss for every trade. Never risk more than 1 to 2% of your trading capital on a single trade, and think in terms of percentages rather than absolute dollar amounts. As I said, we covered this in detail in a different video. The second major mistake is coming to trading with truly false expectations. Many new traders expect to earn huge amounts of money in no time at all, sometimes even on their first day or on their first trade. And this couldn't be further from the truth. Trading is not a get-rich-quick scheme. It's a journey that requires patience, discipline, and a lot of learning. A quick solution for this is to have realistic goals. For instance, a good and realistic goal for someone in their first year of trading could be to break even. Another goal we suggest to the members of the Technical Analysis Institute is to generate passive income through long-term investments, allowing them to increase their investment capital steadily. To avoid the false expectations mistake, we suggest the following: set realistic, achievable goals for your trading journey. Understand from the very first day that consistent profitability takes time and practice. Trading is a marathon, not a sprint. And finally, focus on learning and improving your skills rather than on immediate profits. Now, if your goal is to start earning money in the markets from day one, you might find this video way too negative, or as I prefer to say, realistic. But it's important to understand that if we allow our investment capital to grow over time, the day will come when we can leave all other activities, retire, devote ourselves entirely to the markets. Remember how in previous videos we talked about how the ego can damage our trading results? Well, you'll win a big victory over the ego if you force it to wait. Trust me on this. Patience is one of the greatest virtues in trading, and the people who suffer most in the markets are those who can't wait. They start trading without proper capital. Some even borrow money hoping to double or triple it in a few days or weeks or months, and this is a recipe for disaster. So a very valid question arises: are you doomed if you don't have enough capital right now? Should you stop all your efforts? The answer is absolutely not. In fact, you might be in a privileged position. If you don't have enough capital, it's the perfect time to start learning how to trade properly and practicing with a simulator. As long as you don't borrow money to start trading live, you'll be forced to be patient and wait until you have enough savings and skills. During this time, you can properly learn technical analysis, chart types, forecasting techniques, and test different strategies and prove to yourself that you have a proper profit factor under various market conditions. We address the profit factor in a different must-watch video, and by the time you have a decent amount to start trading live, you'll know exactly what your possibilities are, how often you'll lose, what percentages you can lose, and what positions are worth taking based on the risk involved. So in conclusion, yes, it's true that a large percentage of traders lose money in the markets, but the money they lose is actually earned by a small percentage of traders who are patient and think strategically and take the time to learn the proper way to trade. And that can be you. Avoiding common trading mistakes like bad money management and having false expectations is absolutely key to becoming part of that successful group. If you have serious goals for your trading and investing and want to learn seriously good practices of money management, you may want to check out our Traders Shift book series. The 4th book is entirely dedicated to money management, and we have students saying it's the most helpful book on managing money practices. You'll find the link below. And if you like this video, you'll love this one here. Don't forget to like, comment, and subscribe for more trading tips and strategies. See you in the next video.